As I've been talking to sources across venture capital, one question keeps coming up over and over again. Is big tech M&A back, or is Wiz fundamentally a one-off? This week, Google announced plans to acquire cybersecurity startup Wiz for a whopping $32 billion. Many have described Wiz as the fastest growing cybersecurity company in history. The company has long been a private markets juggernaut and is backed by some of the biggest names in venture capital, from Sequoia to Index Ventures to Cyberstarts. Over the last few years, tech exits have been pretty stalled. That's IPOs and M&A. On one hand, you've had former FTC Chair Lina Khan, who was very likely to scrutinize the deals of big tech, a traditional acquirer of startups. And on the other hand, you've had geopolitical and macroeconomic pressures creating a situation where IPOs almost dried up entirely. Folks pretty unanimously tell me that they do believe startup acquisitions are more likely to get done with the limited regulatory scrutiny of the Trump administration. On the other hand, I still do think there's a situation where Wiz is fundamentally a one-off. Think about it this way. Other cybersecurity companies look at Wiz and all of a sudden they have higher expectations than they ever would have had before about what an exit might look like, whether that's an IPO or whether it's an acquisition. Buyers aren't willing to meet those expectations, so what ultimately ends up happening is Wiz is then not a bellwether, but an anomaly. The Wiz acquisition could turn out to be an inflection point for tech M&A moving forward, but for now, at least when it comes to what it means for the broader landscape, there are more questions than answers.